Hello, good afternoon, everyone. It's my pleasure to introduce you the team around with me here. I have Vinita, Nilesh, Naresh Gupta, Rajiv Pillai, Arvind, and Mr. Sunil Makaria to take up your questions. To begin with, I just would like to say that this is a quarter where we definitely see operational improvement in the performance, both in the top line and in the bottom line. You would have noticed that there has been a growth sequentially and corresponding quarter of 12%. Even if you take out the one-time income, licensing income, it's about 7%. Likewise, the EBITDA line also, if you, kind of corrected for the Forex and the one-time income, you would see that there is an increase of about 3%. So that is a broad outline. I think I also understand that the business is getting more stabilized. But to walk you through the details, I'll now request Rajiv to take you through the financials, and thereafter we'll open the lines for question and answers. Rajiv, please.
Thank you, Dr. Sharma. Good afternoon, friends. I'm pleased to take you through this quarter's performance. Our sales for the quarter, like Dr. Sharma said, was 4,377 crore, which grew sequentially by 12.5% and YOY at 12.2%. Excluding AbbVie, our growth has been around 7.1% sequentially and equally around 7% YOY. This growth has been secular across most of the geographies. North America grew at around 13.5%. APAC grew very strongly, with Japan growing around 15-odd%. Similarly, LATAM also did very well. As far as our institutional and API business, they also grew fairly well. India has been flattish and EMEA has shown slight degrowth. Our gross margins for the quarter came in at 63.4%, and this was lower than the previous quarter, but adjusted for AbbVie and FX, it would be normalized around 63-odd%. The EBITDA for the quarter came at around 18.2% as compared to 20% in the previous quarter, the sequential quarter that is. Like Dr. Sharma alluded to it, adjusted for the Forex volatility and the one-time licensing income we received from AbbVie for the Malt-1 licensing product, the sequential quarter operational growth has been around 3%. FX losses have been across lines and stand at around 157 crore versus the 213 crore gain which was there in the previous quarter. So adjusting for both the Forex volatility across quarters and the one-offs that we see across the quarters, we see an operational EBITDA improvement of 3%. R&D came in at 425 crores, and this is, like we committed, to be around 9.7% or 10% of the turnover of the sales, and we will continue to maintain the same clip. That's all from my side on the operational highlights. We did see a fair amount of cost containment measures and operating leverage, and now would open the floor for questions.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Sayan Mukherjee from Nomura. Please go ahead.
Yeah, thank you. My question is, can you share the sales for the U.S. branded business and Solosec, particularly for this quarter?
We normally do not give segmental growth for every quarter or for brand versus, but I can say that it was flat compared to the previous quarter.
I think we give the sales for the US.
So that's been around 7 million for the, around 8 million for the branded products.
So the total sales for the US was 193 million,
yeah,
and 8 million of that was branded.
Right.
So you mentioned the Solosec at $3 million, I think, in the previous quarter. So how much will that be this quarter?
Around the same level. You know, the previous quarter, Sayan, had the stocking. We basically recognized the inventory that we had put out in the trade at the time of the launch. So there's a little bit of that, 2-quarter phasing that really we recognized in Q2. So in Q3, you're seeing the actual revenues pretty much aligned with the script generation, the demand generation.
Okay, Vinita, just one question there. So the IMS data shows some dip in prescriptions. I mean, is it a true reflection of what you see in the market? And what's your view, the way the prescriptions have ramped up so far?
So, actually, the dip in the market, the dip in the prescription was primarily to do with the holidays. If you look at the script growth in November and December, actually script ramped up very nicely and peaking at 1,500 scripts a week. So December was on an average 1,500 scripts a week, but just so it ramped up very nicely between November and December. And then the dip we saw was the Christmas week and the New Year's week. As we look at the scripts right now, they're already trending in the right direction. I think in a week's time we'll be back at the pre-holiday level, and then growth from there, obviously. I mean, it just shows you how promotion sensitive the product is when in the holiday season.
Okay. Thank you, and I'll join back the queue. Thanks.
Okay.
Thank you. The next question is from the line of Neha Manpuria from JP Morgan. Please go ahead.
Thanks for taking my question. Vinita, we have done a very strong growth in the generic business in this quarter versus the last quarter. But if we were to look at the, margins have pretty much stayed flat, adjusted for, the one-offs that you called out in the opening remarks. So why isn't the improvement in the generic business that we're seeing reflected in margins?
Actually, so the margin both last quarter as well as this quarter was significantly impacted by Forex. With a gain in the last quarter and really a loss this quarter.
So in terms of business mix, if I may add, we had a flattish growth as far as India is concerned. India has been lower, so that contributed to the margin mix change. But while we had an offset in terms of increased margin from US, the business mix impact of India reduced that salience.
So I think the biggest
FX,
the main thing was the FX, and the rest of it was the business mix.
Correct.
Yeah.
How much was the FX in the quarter? If you could
about 1.5% of the margin change.
Okay, understood. And my second question is, on the outlook. I mean, we have a good launch calendar. We've already launched, I'm assuming, levothyroxine. We have Renexa. As we look into FY20, we have a couple of good launches. So how should we look at the generic business, particularly going into FY20?
Yeah, so the base business is very solid. If you look at what we delivered in Q3, majority of that was the base business, the inline older products. We really didn't have any material new launches. Now with Renexa in our portfolio, we're launching in the next couple of weeks, and levothyroxine will be launched later in the quarter, in March. So we'll get very little of levothyroxine in this quarter, but next quarter onwards and for full year next year, we should have the full impact of levothyroxine actually ramping up, as we get bioequivalent, as we get FDA approved on the bioequivalence against all the RLDs. So on the generic side of the business, of course, Renexa is exclusive for a short period of time. So after that, we expect levothyroxine to pick up generic business growth. And then later in the year, we also expect ProAir to get approved. Hopefully, once we get ProAir approved, we expect to launch later in the year. So, so we're looking at really the generic business has turned the corner this past quarter, and with the near-term growth drivers. Also, we have other smaller launches. We're looking at 20 launches next year. We should be able to grow the generic business.
ProAir would be closer to the fourth quarter in FY20?
Yes.
Understood. Thank you so much.
Thank you. The next question is from the line of Tushar Manande from Motilal Oswal Securities. Please go ahead.
So just with respect to his observations at Mandideep, so just would like to understand tentative timeline to implement the remediation measures with respect to observations.
So we have obviously responded to the 483s. We have sent a follow-on update as well. There are certain actions that we've committed to. The timeline for that broadly is the end of March. So I think by the end of March, we'll have addressed most of the observations. As you would have seen, there was an observation for training. I think that's the only one that will go on for a more prolonged period of time. But I think we have addressed most, and the balance we will address by March.
So this training-related issue, will that affect any if at all any product approval, so to say, or?
So we have no products pending approval from Mandideep, as you know. That's the older cephalosporin site, so there's really nothing pending from there.
Okay. And secondly, just on this Solosec, there have been reviews in terms of the taste being too bitter and being lingering for longer time. Does that, by any chance, impact the prescription rate, or it being a much better treatment, it offsets that adverse effect of taste?
Actually, we haven't got any adverse events or feedback on the product taste. The only, adverse event that we'd heard of was when people crunched into the granules, which they were not supposed to do. They took it with granola and therefore, could taste the drug. But otherwise, if it's taken as per label, you should not really be able to taste the bitterness of the product. The feedback that we have gotten on the product is very strong. I mean, it's rock solid. The physicians like it. Patients that take it have been treated. So both from an efficacy standpoint as well as a taste standpoint, we haven't really heard any negative feedback.
Understood. And just lastly on levothyroxine, will capacity by any chance be a constraint?
So we've actually set up dedicated capacities for levothyroxine. So I think we have a good amount of capacity. So we would love to see that challenge. I think there's going to, as we have talked before, there will be a slower ramp up to this product. We weren't even sure if we would launch it till it was bioequivalent to all the other RLDs. But now I think we feel good about being able to launch and get some market share. As we get approval for the other RLDs, I think that's when it comes into full swing. It's a very sticky product, so the ramp up will be slower. But obviously the product will stay for longer as well. But we have good capacities.
Okay, great. That's it.
Thank you. The next question is from the line of Sayantan Maji from Credit Suisse. Please go ahead.
Yeah, hi, this is Anbaf here. Vinit, just on US sales, is there any large stocking in this quarter, like Tamiflu? Have we stocked a little higher so that we're good for next quarter also? Because the US sales ramp up is very strong on the generic side.
Yes, so it was a really hardcore performance of the generic team, nothing to do with stocking. I wish we had some stocking for the flu season. Unfortunately, the flu season has been very light through December. It's picked up only in the last couple of weeks, so we have seen some pickup in products like oseltamivir. Majority of the growth was on our top 10 products, older products like lisinopril combination, Cefdinir, so some flu season products, Cefdinir and Cefaxidil. It was really a matter of leveraging our supply chain. Our team really worked hard at picking up share in the older products as some folks left the market.
Okay. So basically you're saying this is the new base for us. Is that like, because it's just such a sharp increase in a quarter, that's why I was wondering. So is this a new base? Of course, adjusted for Tamiflu. Let's say we think about quarter one when Tamiflu seasonality is gone. So adjusted for that, you're saying this is very much the volumes here to stay with us?
Yeah, it's a solid base. Maybe we don't have any one-off.
And just second question on Solosec, one of the presentations you did recently mentioned that the repeat prescribers for Solosec are roughly about 52%.
That's right.
So just wanted to check that what are the top one or two reasons why the remaining 48% are not prescribing Solosec?
It's just a matter of really getting used to writing the product, which takes time. The physicians that have used it and are writing it and getting the patients to use the product, obviously are seeing results and therefore encouraged. I think one of the challenges that we noticed in the last couple of months was availability of the product at the right pharmacies. And what happens is a physician has sent a patient to, they've written the prescription and the patient doesn't get it because it's not available at the pharmacy, gets substituted, the physician gets put off. Likewise, in some cases we saw a challenge on pricing, that, we have very good managed care coverage, but still, in the early launch phase, in the first 6 months, is spotty in some territories. So, in cases where patients do not get good coverage, you'd see a switch of the script. So we've also seen that, the number of scripts that actually were generated versus the ones dispensed, there was a delta. So there are a lot more scripts written compared to the scripts that are dispensed. And our team is working hard to ensure the pull-through from the physician's offices to the pharmacies and payers to ensure that the product gets dispensed. Yeah, so we haven't heard any negative feedback on the product. We haven't heard that, physicians say that they gave the product to the patient and it didn't work or anything of that sort. The feedback has been very positive. Our team really is working hard on ensuring that the physicians continue to write the prescriptions and the prescriptions actually get dispensed.
That's helpful. Just one clarity on this. Why would this availability of product at pharmacy be an issue? I mean, this may be a challenge in the first quarter when we launch, but now we are almost 7 months plus of launch.
Yeah, so that was in the first quarter. It's not at this point. At this point, the only issue that we have heard of is really pricing, again to do with coverage in a particular territory versus what it will cost a patient, and therefore concern on pricing. And also that we have addressed in the last couple of months with additional savings coupon for patients that have a high copay.
So now what is the coupon? Initially when we launched it was $25 to a patient. Now what does the patient pay for it?
It's still $25.
So what is additional here?
It was changed to $25 actually.
Okay, sure.
So there's no further change. It's the same change that we made.
Actually, it was changed to $25.
Right.
That's the change we made back in November.
Okay. Thank you.
Yeah.
Thank you. The next question is from the line of Nitin Agarwal from IDFC Securities. Please go ahead.
Hi, thanks for taking my question. On Solasec, based upon this experience of the first 6-7 months, do we remain comfortable, with the $180 to $200 million number that we talked about as a potential peak sales for the product?
So we have a long way to go, obviously, but the initial trend has been very encouraging. The fact that the product, has been well received by the physicians have been willing to write it. The challenge that we saw in the initial quarter more to do with availability of the drug, in the second quarter adjusting for price. We're seeing the results of the changes that we made in the last couple of months. So it's obviously on a very positive trend. I wish it was further along, but at this point we're still expecting it to get to that 15 to 20% peak share and working towards it.
In terms of market share, at what stage, in terms of timelines, would you see an inflection point in these prescriptions in your own assessment?
Well, we're hoping in the next couple of months and quarters. Already, compared to Q2, our scripts have more than doubled, obviously, gone to the 1,500 level from the 800, 700 level. We really like to get as fast as possible to the 5,000 and 10,000 level, but working towards it.
Thanks. And secondly, on ProAir, how do you, in your assessment, what's the addressable market for ProAir? Do you see it being a product which is going to be substitutable across the molecule class, or your target audience is going to be essentially the user of the ProAir brand per se?
So we always felt that a generic would compete with across all the brands, ProAir, Ventolin, as well as Proventil. And we still see that as the market that we're going to address.
And what could what could be the challenge to that assumption?
At this point, actually, we should be able to tell in the next few months how the market behaves. We have 2 AGs, as you know. GSK launched AG to Ventolin, and Teva, of course, launched the AG to ProAir. And, we believe that each of them is going after the entire market. So, but, in the next couple of months, we'll be able to confirm for sure. We certainly think of it as, one market, one albuterol market. And we hope that the fact that these companies have launched an AG, at a reasonable price, hopefully that expands the market some.
Okay, perfect. Thanks. And lastly, on this Mandideep issue that was raised earlier, we had a recall recently which was, I think, classified as a type 1 recall, class 1 recall. And that sort of combined with the observation, does it create any issues for the facility?
So I don't think so on the count of the classification of the recall itself. We've unfortunately had class 1 recalls even from other sites, and that didn't escalate action in itself. In fact, we tried to push hard to justify on why this should not be a class 1. because in reality, this doesn't go to the consumer, right? So it's used in hospitals or in clinics at best. But eventually that is an FDA decision, so they made the decision on the classification. But I don't think that escalates in itself.
Okay, thank you.
Thank you. The next question is from the line of Mehul Sheth from Phillip Capital. Please go ahead.
Yeah, the one question related to your forex loss. Can you quantify the number?
Yes, so I had mentioned that at the outset, it's about 157 crores across all the lines.
Okay, and one question related to your US business. So, how do you see a competitive scenario in levothyroxine? Because there are many similar competing brands as well.
Yeah, so there are a few brands, and then you also have a couple of generics. We still see it as a limited competition with no market and product. Where the generic companies like ourselves have certified, have proven that our product is bioequivalent to 3 RLDs. So we should be able to participate in the entire market for all the brands.
And one more question related to your tax structure. So what would be the ideal tax rate for, say, FY20 and 21?
Okay, so currently, of course, you've seen what we saw was around 48% for the quarter, but that's not reflective. So I think if you look at the various regimes across where we are having operations, our cash tax rates are in the range of 28-29%. From an accounting perspective, the rates would range around 35% plus. So I think it will be closer to 40% for the end of the year from accounting perspective. Cash tax would be around 28-29%. And as we have, as our international subsidiaries generate profits over the years to come, these tax rates would naturally go down.
To the 30% that we have talked about in the past.
Closer to the cash tax rate level.
Okay. Thank you, sir.
Thank you. The next question is from the line of Shashank Krishnakumar from JM Financial. Please go ahead.
Yeah, hi. This is Anmol Ganju. So a couple of questions around the 157 crore forex impact across line items. Would you want to quantify it, because the swing is now across quarters becoming way too large in terms of how it is captured across various line items?
Right. So
you can talk only about some lines.
You can talk about this.
We'll take it offline, Anmol.
Okay. Thanks. Second question is around the U.S. Vinita, you alluded to most of the improvement in the U.S. coming from greater share in top 10 products. What is the underlying trend here? I mean, what has changed with respect to pricing, competitive behavior, volumes? If you can just help us understand that better, because going forward, are we at an inflection point where destructive pricing is probably taken a back seat or something? Is something really at an inflection point in the U.S. that we should be understanding?
Yeah, and also the impression I have from what we're hearing from all of our peers as well as customers is that the pricing pressures have abated some in the U.S. I mean, companies have been far more rational over the last few quarters. And have pushed back on, demands to lower price. You see a number of companies exit. I mean, you look at Teva, of course, being the largest from a portfolio standpoint, Sandoz exiting a business, Mylan exiting a portfolio, and there have been other disruptions as well, like these, which again sends the right message to our customers that, the manufacturers have really gotten to a point where you have to be reasonable to be able to, have viable quality manufacturers. So we really have, from what we're hearing from majority of our peers, as they make statements, majority of them also looking at the market the way we do, that pricing pressure is back to the single-digit level. And we hope that that stays for the year to come and going forward. So it's that stabilization of from a pricing standpoint, and then some exits from the marketplace that we were able to leverage to be able to grow our share in a number of our older products, and believe that this is a turning point for our U.S. generic business now that we have material new product launches like Renexa, like levothyroxine, and hopefully ProAir later this year, we have new growth drivers for our business along with the stabilizing base business.
Okay, so a couple of follow-ups on that. One is, as far as the U.S. is concerned, if you look at this quarter, then is $830 million annualized the new base that we should be working with? Is that the number which you have kind of comfort on?
Yeah, I'd say at the lower end of that range right now, just given the first half performance. But needless to say, Q4 will be a strong close because of Renexa.
Right. And from an FY20 perspective, given the regulatory situation at some of our facilities, are there some of the key assets we are thinking in terms of de-risking, and how much of our incremental growth is linked to a satisfactory resolution of these? That's my last question.
We're thinking that we can launch 20 products or so, as we sit right now with the current, compliance status, and should have an upside to that once the warning letter and Goa and Pithampur clears.
Okay, thanks. That's helpful.
Thank you. The next question is from the line of Srijan Sinha from Future Generali. Please go ahead.
Yeah, thank you, sir. Just wanted to check, is Renexa filed from one of the warning letter affected facilities? And if so, will it impact our launch?
So we have final approval on Renexa.
Which means you can launch the product, right?
That's
yes.
right.
Okay. Thank you. Thanks a lot for this.
Thank you. The next question is from the line of Ashish Thakkar from Motilal Oswal. Please go ahead.
Yeah, thanks. So just two questions.
We can't hear you. Can you speak up a little?
Yeah, it's okay now?
Yes.
Yes, much better.
Yeah, so first question is the licensing income. So on a net-to-net basis at the EBITDA level, how much you would have realized? I guess you might have, expensed out some of the R&D, and then you would have realized the sales. So out of 210 crores of sales this quarter, how much would be at the EBITDA level, if you could share?
This is the upfront milestone income that we receive for the every deal, and the total cumulative milestone can be up to 947. Of course, that's over a period of time, but this has nothing to do with supplies.
No, it will not netted off any R&D expenses against that.
It is flowed through from the revenue line all the way to the EBITDA level. And that's why when we talked of the normalized EBITDA, I was excluding this number.
I think the specific question is, did we offset any R&D?
No, there was
no. Only in the revenue line.
Okay. And so what would explain the dip in the gross margin if I strip off licensing income?
So like we said, it was Forex and the business mix.
Forex. So you're saying the net Forex loss of 157 crores is at the PBT level?
Yeah, we talked about in the gross margin line 1.5% impact just on Forex count.
Fair enough. And going forward into like FY20, FY21, how confident are you on the US business vis-a-vis the current financial year?
Well, I think we are on a good track at this point to close, the year on a strong note. And now that we have levothyroxine as well as ProAir next year, plus the base business and other launches, we believe that we're on the right track.
Okay, fair enough. Thanks and all the best.
Thank you. The next question is from the line of Shyam Srinivasan from Goldman Sachs. Please go ahead.
Hi, thank you for taking my question. Just the first one on the India business, it declined 1% this quarter, maybe because of inventory last year. So can you just tell us how to look at this business now, from a fourth quarter or an FY20 perspective? How should we look at this? And in terms of new product launches, you have done lots of in-licensing as well. Just trying to get some sense on the India business.
So, as you would know for India, typically the first half is stronger. Just as, the seasonality of the country, a function of winter months versus, monsoon. So typically we see that, right? So first half will always be stronger than the second half. So we expected this sequentially. So you see the year-on-year growth. And again, the next quarter will be no different. So typically we would see more growth in the first half than in the second half. But 12 to 14% is what we always talk about, a few percentage points more than the market, and that will continue. So we'll see that into Q4 as well, and certainly we see that for the forthcoming years. On the in-licensing, I think that's really generally, I think that's something that Lupin excels at. I think we've really done this well. And, there's no reason to not believe that it will continue more and more. Certainly, we have a pipeline of other products that we are chasing or have lined up as well. And these will keep coming.
So our year-on-year numbers of growth are around 13.5 to 14%. And that's what we should continue to grow at that pace.
You're talking 9 month here, right?
Yes. Yeah. So we should look at it annualized because there is seasonality between H1 and H2.
Yeah. Just a related question to this, given that, maybe 4Q is also going to be softer from India. So the 63% gross margins that you talked about normalized, is that what we should be kind of keeping in mind for 4Q as well?
Yes.
Yes, in general, but we'll have Renolozine as an exclusive generic launch. So obviously that will skew it.
Got it. My last question is on the effective tax rate. I know there are several moving parts here, but some of your peers have had U.S. tax rates actually come off, right? So, is there a sense that we could actually see the benefit of lower U.S. tax rates on your bottom line as well?
No, I would say presently the way in which our transfer pricing works, that most of the profits are kept in India. So in India, our tax rate is a range of about 27%. But yes, moving forward, that we'll see that how we can take the benefit of the lower tax rate in the USA.
In addition to that, improving performance of the U.S. assets would help us to get there quicker.
True, absolutely.
Great. Thank you and all the best.
Yeah.
Thank you.
Thank you. The next question is from the line of Arpit Kapoor from IDFC Mutual Fund. Please go ahead.
Yeah, thanks for taking my question. The other operating income seems a little higher this quarter, so if you can just quantify if there's any, how should we go about building the number?
So I think that's driven by higher sales, export sales. So we've got export benefit. There would be some other litigation kind of income, but that's a normal run rate. So I think you will see this.
There's more shipments, so it's higher export benefits and some settlement income.
That's it.
Okay. And the forex loss of 150 crores, can you quantify what's the nature of the forex loss? So we had hedges, or why did we incur that bigger forex loss?
So that's the closing. That's influenced by the closing rates.
It's a translation and transaction losses that would happen on a quarter-on-quarter basis, right? In the forex, I think the rupee moved by almost 3 rupees
so it was,
in the course of the quarter.
It closed much lower than the previous quarter, and so your receivables and payables would get adjusted appropriately, and that's why you see what you call as a transaction gain or loss, as the case would be. So that's the primary driver.
Okay. Thank you.
Thank you. The next question is from the line of Saket Bansal from Stock Access. Please go ahead.
Yes, hello.
Yes.
Hello. Yeah. Sir, I wanted some numbers, some data points. What will be the total branded business for the quarter?
He said there's $8 million.
And that would be completely Solosec, right?
No, it's a combination of the legacy products. We said Solosec was at the same level as Q2, around $3 million. The rest of it is Entara, Methagene, Suprax.
Okay. And I missed the initial commentary. If you have mentioned something about levothyroxine, what kind of a sales figure you are looking for this year and going forward? Can you throw some light on it?
Yeah, we just mentioned that we're going to be launching the product later this quarter, really in March, so very little in this year, but it should contribute very well to fiscal year 20. It'll be, we mentioned that it's going to be a ramp up because, we're going to be strategic about how we build share in the market, and it's an important product for us for the next couple of years. So it should be a good contributor next year.
For next year, but nothing for this year?
We'll just launch some launch quantity.
So only the launch one. Okay. And what are the, like albuterol is there, then there is Towel, then there is Spear. So are this in line for launching?
Yes, we are hoping to get approval for albuterol later this year and hope to launch it later this year. So both levothyroxine as well as albuterol should contribute well to fiscal year 20. We also have other smaller products that I mentioned that we have 20 or so launches. And if once we clear the warning letter at Goa and Pithampur, we should have additional upside launches.
Okay. Okay, that's all from my side. Thank you.
Thank you.
Thank you. The next question is from the line of Ranjit Kapadia from Centrum Broking. Please go ahead.
So my question relates to CAPEX. For how much was the CAPEX guidance for FY19 and FY20? And my second question relates to parent drop in litigation. We have already provided 3.4 billion for the provision. So is there any further provision or this is for full and final?
So on the capex, about 600-700 crores is the run rate that we have. We're pretty much running at that quarterly run rate also. So 600-700 crores for the year, and next year will be a similar number also. On parent drop, we have provided for the entire amount.
Okay, thank you very much and wish you all the best.
Thank you.
Thank you. The next question is from the line of Sameer Baisiwala from Morgan Stanley. Please go ahead.
Thank you and good evening, everyone. Vinita, what's your current revenue concentration for the U.S. market, like top 5 or top 10 products?
It's well spread, actually, Sameer.
Yeah.
We don't have, unlike the past when we had big dependence on Sportum and Lumetza, we don't have that anymore.
And that's now completely normalized?
Yeah, pretty much.
Okay. And just, I think on the news channel, you said that you expect, just want to confirm, 23-24% operating margins over the next few years. Is that the direction?
On the EBITDA, we said after in the next few years, we'll want to bring it back to the 23-24%.
Well, we're talking, as we look at our plan over the next 4 to 5 years, with as the complex generic pipeline unfolds as well as the build of our specialty business, we expect our margins to improve. In addition to that, we talked about the fact that our cost optimization, margin optimization measures would also start delivering in the next fiscal year to a good extent, but full extent the year after. So.
Okay, great. And just on Solosec, given what you mentioned, Vinita, on the pricing side, your net is $170 or is it now moved a bit lower?
It's a little bit below that, Sameer. Our focus right now has been to really drive script generation, script utilization, and so when we brought the savings card down to 25, we gave a little.
Okay. And for the US-based business, when your competitor is vacating space and you get additional volumes, do you ask for better pricing? How does this volume pricing dynamics work for such products?
Always, Sameer. Always ask for better pricing. It's, the fortunate situation is when, that you have these exits in the marketplace. You have, folks that are forced out of the market, sometimes due to compliance issues, like we've seen in the last couple of months. I mean, you're in a position to get, share at a more reasonable price. So we have always tried to maximize, while still keeping our customers competitive. Our goal is really to have a stable share. But, I think we took many quarters and had a couple of years of hit on pricing and are now trying to ensure that, we optimize.
Okay, great. And just one last one on Enbrel. Nilesh, what's the update over here, especially for the site inspection by EMA and CHMP timelines?
Sure. So we had inspections by both Japanese and European authorities, and they've gone well. And on Japan, I think we're on track for probably approval in the next quarter, and then probably launch in September or so. In Europe, also somewhere between September or the following quarter is when we would expect approval and launch.
There were no observations from any of these agencies?
I think there were some small observations. I don't even think we have final reports from them. I think it's only the points that we've noted down. It still has to go through that closure.
Okay, great. Thank you so much.
Thank you. The next question is from the line of Nimish Mehta from Research Delta Advisors. Please go ahead.
Yeah, hi. Thanks for taking my question. I just wanted to understand better the situation with Solosec. So can you just explain the current pricing vis-a-vis our competition and what did we change from when we started?
Just Pricing is fairly competitive, compared to the competition. I mean, we had done very good pricing research when we set both our back price as well as our net price. And the only change compared to when we launched was we brought in savings cards to help offset some of the out-of-pocket costs for patients that were on high copay. As at least right now until the managed care gets caught up in all the individual territories. So that's
how much does that cut? How much does that cut impact us in terms of percentage from when we started?
Not in a material manner.
I think the goal at this point of time is to gain prescriptions, to get repeat prescriptions, to get doctors to write frequently. Once you do that, and I think, these kind of copays are part of regular product launches, you get a lot of time to be able to optimize them over time.
Okay, and we compete with which product? If you can, please correct me if I'm wrong. We're competing with a generic product, right? Largely speaking, the current leader is a generic product.
Yeah, the market leader is a generic product, but when we look at brand, we compete with products like Lindes and Nuvesta.
So when we are benchmarking our pricing, we are benchmarking it with the generic product or with the branded product?
No, we wouldn't have been able to launch the product if we were comparing it with a generic product.
Right.
It was obviously priced as a brand product.
Okay, and how much is that, in terms of, again, if you can just give me a ballpark estimate, what is the range of pricing among this competition? If we are 100, then the others would be there.
They're all in that same 150 to 180 range.
Yeah, it's similar. You would keep the pricing very similar as the cost of therapy.
Okay, understood. And one last thing, if I may, on Renexa, I guess you have 180-day exclusivity, and do you expect competition post that?
We have 3 months exclusivity, not 180 days.
Oh, sorry. So do you expect competition post that, or you think that it will remain low competition even after that?
No, we expect competitors after that. At least 3 to 4.
Okay. Fair. Thank you very much.
Thank you. The next question is from the line of Damayanti Karai from HSBC. Please go ahead.
Hi, thank you for the opportunity. So coming back to US, I just need clarity. You said current quarter numbers represent our new base, right? So we have seen stabilization in terms of pricing, and whatever improvement we have seen sequentially, that all came from higher market share. Is that understanding correct?
That's right.
Okay, so in like big products like Methogen or your Metformin, now like we are able to protect our share or get some more share against the competition.
So not Methogen. Methogen was the brand, and we actually lost share because the brand went generic. So we have an AG to Methogen. But others, like the Metformin products, Fortamet, Glumetza, have stabilized.
Stabilized in terms of market share, you mean to say?
That's right.
Okay. Coming back to Goa and Indore, now what kind of timeline you are looking for resolving the pending warning letter there?
Right. As you know, the Indore inspection got done. The Goa audit is ongoing. So I'm thinking, earlier we had obviously guided towards the end of this fiscal as a likely timeline for resolution. Our hope at that point of time was the FDA would have come in the, November or so time frame for an inspection. That obviously did not happen. They actually came only in January. So I think the whole thing is moved out by a few months. I'm hoping that if things go well, if we're able to satisfy things to the agency's level, I think probably the first quarter or, in the worst case, the second quarter is when we would expect resolution.
So most likely by second half of next fiscal, right? We should be...
I think before the second half of next fiscal.
Okay. Lastly, can you update us on the Advair generic development program and how much cost you have earmarked for that?
How much what?
Advair.
What was the second part of the question?
What is the cost?
How much cost?
Yeah, so we continue to pursue the product. We are still not through the a positive PK study, so, wish we were further along, but we continue to pursue the product. I mean, and in terms of the overall contribution of cost in our R&D number is very, very small, just given that it's still not at that PD study level.
So right now you have allocated cost till PD studies, and then going ahead as we move further in the program, more costs will come in here, right?
Yes, subject to a successful PK study, then we will go into a PD study, and that would be at a higher cost.
Okay. Okay, thank you very much. That's all from my side.
Thank you.
Thank you. The next question is from the line of Ankur Shah from Qtr3 Capital. Please go ahead.
Hi.
So we can't hear you.
Hello?
Yeah, we can hear you now.
Yeah. So I was just going through the whole R&D spends which were undertaken in the last 3-4 years, and, maybe the figure totals up to around 7,000 crores. So I was just thinking about the efficiency of the R&D, and when, because from an incremental revenue perspective or margins, we haven't been able to monetize a lot of it, at least in the last 2 years, because of the maybe some of the disruptions in the market. But if I think about the next 3-4 years, how do you think about this R&D efficiency? Because we have been very aggressive over it.
No, so I think we've been fairly disciplined in managing R&D at under 10% of sales. I mean, we obviously have invested ahead of the curve into areas like inhalation, complex injectables, biosimilars. And to be honest, we're starting to see we will start to see the benefits of it this year. So really we are around the corner from realizing returns from these investments with, our first biosimilar, our first inhalation product coming to market. As we look at the next, 4 to 5 years, the products that we invested in the last few years, in particular the complex generics, are a big part of our growth. So we expect them to be a big part of our growth driver. So parts of R&D that we have, questioned in the past, in particular NCE, for example. Can you hear us?
Yeah.
There's a disturbance on the line. Well, I was saying, parts of R&D that we have questioned from an efficiency standpoint, even those now with the Malt-1 deal with AbbVie, we have started to get a return on that investment.
Yeah. I would say, if I can just add, I would say about 70% of our R&D spend is on complex generics at this point of time, whether it's biosimilars or complex generics. That is the big bet, right? I think, obviously, as we look at the generic market, a lot of the market is now moving towards opportunity in complex generics, and that's where we're investing.
Okay. And sir, just second question on the margins. So if I think about the Indian business, till I know it does around in upwards of more than 25% margins. And if I think about rest of the business, and if I think about a majority of the R&D spend allocated to the U.S. pipeline, is it like the U.S. margins, U.S. business doesn't even make it hardly makes single-digit margins? Is it right to conclude that in the current state of business?
First of all, I don't think we do segment-wise profitability that way. So I don't think we take it down to the EBITDA. We do it for internal reporting, but not for any other purpose whatsoever. I think India and US are the two big profit generators of the company, of course. And I think especially once the US picks up, there's obviously a base level cost, but I think as the US picks up, as it is right now, it obviously churns out very meaningful profits.
No, I agree with the point that you all don't give the segmental EBITDA margins. But just from a business SKU perspective, it's a question that maybe India doesn't require that much R&D investment support, which the US pipeline might require, US business might require. And eventually, India as a mix is doing 25-27% margins. And still we are ending up with 16.5%.
So I don't know where you're getting the India margin from, because we never really compute or share that. I think from an if you're making the point on the ROCE perspective, for sure, right? India obviously is a much higher return on capital compared to any other market. For us, also for everybody else in the market. I think obviously it's a market that does not require a lot of R&D spend. I think a meaningful generic business requires significant R&D spend because the business is all based on new products. And if you're going to do that, obviously you're going to invest significantly. But you're investing for the future. You're investing for the next, not just 1-2 years. Sometimes you're investing for 10 years ahead, right? So if you look at some of the big P4s that have happened in the last 2 weeks even, it's for products which are 10 years out. But I think people are looking at that.
And overall, I mean, setting aside the one-off quarters, when overall our EBITDA margins out of US, India, both are above the company average.
Okay. Thanks a lot.
Thank you. The next question is from the line of Dinesh Pathak from Goldman Sachs Asset Management. Please go ahead.
Thank you. Just want to confirm the Forex line item which you said was 157 crores above EBITDA, which is across line items.
That's right.
And you also said that gross margins are impacted by 1.5% because of Forex.
That's right.
So then about roughly 67 or 70 odd crores of that 157 by that math is in the gross cost of goods sold.
Fair to assume. You can do the math.
Can you explain this? Because typically, I understand the transaction impact on current assets and all that, but on the cost of goods sold, why is the Forex impact such high on cost of goods sold? Can you just
So this is also on account of translation of inventories, the way accounting works. So last quarter, if there was, the inventory was revalued at a particular rate, and that rate has come down, so that's going to impact the gross margins, right? That's the real impact that you're seeing on it.
The value will come down of the stock,
yeah,
and therefore the cost of goods sold will go up.
Okay, understood. Thank you so much. Yeah.
Thank you. See the follow-up question from the line of Sayan Mukherjee from Nomura. Please go ahead.
Yeah, thanks for the follow-up. Vinita, when we look at, you talked about the US business turning the corner, it appeared as if, you had this, older products growing because of, people exiting from the market. I was wondering, there have been good number of launches, right? 25 or 20 launches you have. So how much of this, let's say 190 million, would have been contributed by these products which are launched over the last 1 year?
Actually, a very small part. When I look at our growth, the majority of the growth has come from the older products. The new launches have, the last 1 year have, roughly contributed around, under $15 million.
On a quarterly run rate.
On a quarterly run rate, yeah.
Okay. So, so the point is, when we look forward over the next couple of years, besides the key high-value products you mentioned, is that something will change, or, you would expect, let's say, $60-70 million from the rest of these, 20 launches that you would have? Will anything change there, or mostly, in that range?
You mean from the baseline?
Yeah, the new launches, the 20 new launches, that would have, it would be like $3 million kind of per product, right?
Yeah, so apart from the ProAir as well as levothyroxine, the others will be relatively smaller. But roughly around 20 products that we expect to launch.
At 20 products, I would say about somewhere between 70, 80 up to 100 million. That's usually the kind of new product number that comes out, except for the one-off kind of products.
Okay. And have you launched budesonide suspension already?
No, we're in the process of it. Launching this quarter.
Okay. And just one last question on the, the bacterial vaginosis market. There are some new products which are planned for launch. How does the dynamics change? Should we think about it anyway?
Yeah, we haven't seen any material new product that has, caught the eye of the KOLs. There was the Viva Gel product out of Australia that was licensed by Telepharmaco. that seems like it is stuck with the FDA at this point. We haven't heard of any material new entrant that is positioned with, the kind of positioning Solosec has. Yeah, and, as we look at Solosec, when we have a 10-year runway, right now we are really focused on building share of the product. Apart from that, we also have significant potential of expanding the label and indications. Just started the pediatric study for the product. We're about to start a study on trichomoniasis that should expand the scope of the product. And we have other life cycle management as well that we're working on. Really, we wouldn't be investing in the product if we saw competition around the corner that can disrupt this market.
Thank you.
Can we have the last two questions, please?
Sure, sir. The next question is a follow-up question from the line of Sayantan Machi from Credit Suisse. Please go ahead.
Yeah, hi. Thank you. Just one question on SolarSec is, when we translate our EBITDA break-even into weekly prescriptions, just as an idea, I mean, would you say that when we reach prescriptions about 9,000, 10,000 per week, would we break even, or could we break even earlier?
Well, you're absolutely right on, Anubhav, when it is around 10,000 scripts a week that we break even. And, we don't think, while I would like to say we can break even earlier, we really see a lot of potential in this product, the potential to get it to 15-20% of the market, and want to ensure that we invest into building it.
Yeah, that's helpful. Just one more clarity on levothyroxine. When do you expect to get approval against all remaining 3 RLDs? Is it like first half or first quarter next year?
So we just filed against the other RLDs as well, hopefully soon, in the next few months.
The prior approval supplements, so technically they take longer, but I think if you're lucky, then hopefully in Q1, but otherwise probably Q2.
Okay, thank you very much.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for their closing comments. Thank you, and over to you.
Well, thank you very much. I hope you had meaningful answers to your questions, and look forward to connecting with you next quarter. Thank you and good luck.
Thank you.
Thank you very much.